Thanks for joining today's session where all of your questions get answered. So all you have to do is ask. There's no such thing as a dumb question.
For it.
Okay, great. So I'm so excited today to have you, Laura. This is Laura Triplett. And Laura, if you could give a brief introduction of yourself. Laura has been in the financing field for many years, and her great experiences have led a lot of clients to successful transactions. So, yeah, Laura, let's hear it.
All right. Well, thank you so much for having me. First of all, we are talking about my favorite subject. I love first-time home buyers. I love grant programs. I've been doing it for 30 years. My name is Laura Triplett, and I have lived in Prince William County since 1972. I have been lending in the DMV area for over 30 years, and I know my grant programs. And all the first-time home buyer programs.
That's awesome because, as you know, I just started this Facebook group, and a couple of people were already asking, can you tell me a little bit more about the types of loans that there are? So we can discuss that, I think, first. So with the types of loans, we know there's conventional, FHA, VA, USDA. Is it still called USDA?
Yes,
Okay.
all of the A's.
Okay.
UHDA,
Awesome.
USDA.
Yeah, so if we could maybe talk about the differences in those and what would make someone choose, you know, talk a little bit about that.
Sure, sure. Well, there is so many options, and that's the great news. Actually, the state of Virginia is probably one of the top states in the nation for having lots of opportunity when it comes to first-time home buyers. So the first thing that we look at is the income of the borrower and whether or not the borrower has owned a home. And it's okay if they've owned a home a long time ago, because the definition of a first-time home buyer is typically somebody who hasn't owned a home in their primary residence in the last 3 years. So this really opens it up to a large portion of people that would be considered first-time home buyers. And the great news is that some of these programs are even being offered now to non-first-time home buyers. So it's not just limiting, one section. They're
Wow.
finding that people now, they want to save their cash, so providing 100% financing or down payment assistance to the non-first-time home buyers is just as beneficial. So the main thing we look at is the income to get started, obviously. Income, and then we look at credit, all the basics that you would look at for a mortgage. And we determine from there, would it be more beneficial for you to go with a Virginia Housing Program, which is one of the #1 agencies in the state of Virginia that provides down payment assistance, or like you mentioned, maybe more of a geographical program, which would be with USDA.
Right.
People think USDA, where's the beef? It is agricultural, but it doesn't mean
Yes.
that the property has to be agricultural.
Okay.
So it's basically a geographic area. And the great news about USDA is it's 100% financing, not just for first-time home buyers, but it is specific for certain regions in the state of Virginia and nationally.
Very good. And so is there any difference in, like, I know people always ask about interest rates, and I always tell them, don't worry about the interest rate, worry about the affordable monthly payment. So whatever we have to do, like the lender will figure out what we need to do or where we need to be, what am I trying to say? Like what number, like what is the sales price of the home, for example, that we need to be in to meet that criteria?
Right.
Because again, it's just about affordable monthly payment, right?
It
But do you
really is.
notice, yeah, so do you know, like, is there a huge difference in interest rates between these types of loans?
Well, I being that I've done this for 31 years, I started before computers. A lot of
I
people
love
are like, what?
it.
I
Yeah.
mean, even the realtors, they used to have like a library Rolodex for all the properties, that they would sell. So
Yeah.
the advantage to that is that I know to my dollars per thousand. A lot of people don't realize that when you borrow for 30 years at a rate of 6 or 7%, you're borrowing every $1,000 is going to cost you at 6%, $6 a thousand. At
Mhm.
7%, $6.65 a thousand. So when you
Interesting.
really break it down to that number, 65 cents, I mean, obviously we're not borrowing $1,000, we're borrowing multiple hundreds of thousand, but
Right.
it's still the monthly payment. Yes, it does change, but it's not as enormous as people think.
That's
And
a really good point.
yeah, and a lot of people, when I explain that to them and I show it to them on just a simple calculator, they're like, wow, I just had no idea that it was that much of a difference.
Yeah.
So those people that are out there waiting for lower rates, I mean, right now we're kind of fighting two things. We're fighting, a slightly higher rate plus a slightly
Prices.
higher price.
Yeah.
But you're going to look back on this point in time likely several years from now and think, especially if prices continue to go up as expected, that this is a great point in time to be looking at buying a home.
And with that being said, prices, I did have somebody recently reach out to me and, we were talking a little bit about the logistics of buying a home and all of this and where we were thinking about purchasing. And oh my gosh, let me mute that.
Yeah.
um, and where to buy a home and where they can save money. And Laura, that just made me lose my train of thought. Where
Yeah,
was
that's
I?
okay. That's why we're doing it, on a recording, but you know what? People like when you are just real. So let's
Yes.
just go with that. We're a nation of distractions right now.
I know it's terrible. I just muted my phone, but
Yeah, no, I just think that, mainly, people need to realize it's not just the interest rate,
mhm,
that you want to look at when you're looking at affordability, and it's not just the price. It's also looking at your overall consumer debt. Okay,
right.
so sometimes people can afford to put money down, but then they decide, you know what, maybe I should do the 100% financing because all of the interest that I'm paying on that loan, I'm going to be able to deduct that on my taxes. And
Right.
then maybe I'll just take my money and pay off my car or pay off a large credit card bill so that as I get into this new home, I'm not straddled with other consumer debt. So when you're looking at your monthly budget, that is one of the things that we have people do. We have them go through all these first-time home buying programs. They do require some, form of education. So typically we can do it online. We do face-to-face as well, but online is where a lot of people go because they want to have time to sit down and just work out their budget, and that's a really important factor.
Absolutely. And so when it comes to down payment and like, well, credit score. So let's first talk about credit score. So what would you say, if you were going to approve somebody's loan, um, what would be the lowest amount of credit that one could have in order to obtain a loan?
Oh, that's a great question. I get that all the time because people come in and they're like really scared. You would be surprised how many people walking around with 700 credit scores think they have not good credit. We
Those
look at,
perfectionists.
I know, right? We look at a range. So the range goes, anywhere from like 400 to 800 on the credit score spectrum.
Mhm.
And obviously, the higher your credit score, the better rating you have. And I've never really seen that many people walking around with 800. So don't worry, it's not like an A+ in school. Okay.
Yeah.
But typically the benchmark for most programs is like a 620 credit score. You
Okay.
don't want to be any lower than that. Now, I get lots of people that come to me and they have a 580 or a 560 credit score. All is not lost.
Mhm.
Okay. A credit score is a snapshot in time. It changes, it can change every single day.
Mhm.
And it's not necessarily that you have bad credit, because you have a 580 credit score. It might be that you have new credit and maybe you've charged your very first credit card up to the maximum. So now you've got two things going against you. You've got new credit and you've charged everything up to the max. Those are some of
Right.
the things that credit scores look at. So the longer your credit rating is rated for, the better your score can get as long as it's being rated with on-time payments. So people that don't have revolving lines of credit, that only have installment loans, like a car loan, for example, they may take a little bit longer to get a higher credit rating because they're not necessarily, reporting, things being charged up and things being paid off, like
Mhm.
a revolving line of credit. So it is a good idea to have a credit card, but I always tell people, don't get a credit card just to increase your score. There are some people that need to do that. But if you decide that you want to do that, use it to charge gas and then pay it off, buy your necessities and then pay it off every single month. And that will really raise your score quickly. We have a credit score analyzer that can, give you specific actions.
Yeah.
We can say, if you pay this off, then your credit score will go up by 20 points. So like I said, it's just a snapshot in time and we can help you through it.
That's fantastic. So it's good to hear that all is not lost. And so when we're looking, let's say I have my credit's 580 and my husband is 620, and we want to come to you to help us, get a loan. What, we might not be quite ready, right? It could be debt to income ratio, like you were saying, or anything like that. So what would your suggestion be? Like, I know you have the analyzer tool, but do you have can you help us come up with a plan for a way to build that credit and then be able to purchase a home? And typically, how long would something like that take?
Well, if you go on myfico.com,
Hmm.
there is a really good, tutorial on how to actions that you can take, daily, to
Hmm.
improve your score. Some people, it's going to take a lot longer to improve a score, like for example, coming out of a bankruptcy or some kind of, major credit event. Others, it may just simply be paying down a credit card and, a couple of days later, you're back to where you need to be. So to answer the question, it really is going to be an individual thing. I would say that the people that need the nurturing, that's what we call it, is nurturing credit. We can help them to a certain point, but then it's going to be on them to take the actions and do the waiting. There are some third-party agencies out there that we've been able to refer to
Oh,
that have
nice.
been able to kind of guide people, because they know that you're specifically trying to get a mortgage loan in the future. So they
Mhm.
really gear in and focus on that. UQual is one of them that we use on the regular basis. And the reason I like UQual, you have to really be careful about credit repair agencies. Some of them just simply want to suppress information just to kind of get you
Right.
through, but others really and truly want to, to educate you. And that's what I love about UQual. They educate you not only to get you to the score you need to be, but to stay at that score and to continue to improve it over time. Because, once you get into a home and you close on your mortgage, I mean, that is immediately going to be a score booster. So everybody's going to want to give you
Yeah.
credit. And
Yeah.
sometimes people get in trouble with that because they get in this house and they want furniture and they want curtains and they want new appliances. And the next thing you know, you're straddled with that. We want to make sure that you
Right.
keep yourself in a good financial situation even after closing.
Yes, one step at a time. So, as a realtor, I always stress the importance, of, doing all what not to do right before going to closing, and definitely waiting a little while before they start purchasing all of the furniture, because as we know, even though the closing date can occur, things can happen a couple
Yes.
days later. So, that last credit pull, right, that the lender does can make a
Yes.
difference.
Yeah, don't quit your job, don't buy a car, don't,
Yeah.
add a big balance to your credit card account.
Don't
Don't
spend
do any of that.
$16,000 on a new bedroom set and
That's right.
living room set and new kitchen updates. So,
Exactly. And
yep.
I always tell the story when I bought my first home, we had a little bit of a rent back because the people were taking time to
Mhm.
move to a retirement place.
Yeah.
And as soon as we closed, literally the next day, the hot
My
water heater
gosh.
broke. And thank goodness my husband's handy because he was able to go to Home Depot and put it in and it wasn't a big deal, but just the expense, so you really do want to make sure there's no landlord to call once you buy a home. So you want to make sure that you have yourself ready for the
Right.
unexpected. And sometimes people will do a home warranty so that their out of pocket is, limited to just the deductible for the home warranty, which I recommend if you're buying an older home. Because they can, maybe for a $75 trip fee, or you probably would know better than me, they can come out and help you, bring the contractor, for you.
Yeah. Very good. So just to, we talked about the different types of loans that there are, and the lender will help you decide what is the best, right? By giving you all the options. There are some programs which the next segment will go ahead and get into that. Um, and also the qualifications, right? We talked about qualifications and that if you really want to buy a home and your credit, is less than perfect, right? Or you could get a better interest rate if it was slightly higher. There are things you can do. And I would strongly suggest instead of, Googling these companies, work with, and you called them credit repair, right? Credit repair companies. And so those folks, it's probably really good to not just Google their information, but maybe to talk to someone who's already been through it and has seen success, or to go directly to a lender such as you, Laura, since you've got some great, you mentioned one, you called it, is it
It's
UQual?
UQual. Mm-hmm.
Is that YOU?
It's a UQUAL.
Okay, perfect.
And
On a Monday
also,
morning, that might,
yeah, in Prince William County, just so you know, they have smart money management counselors too, so that you can actually get counseling in person. I know you probably have people that are buying all over the place, and
right.
probably in, anywhere in Virginia, you're going to find some kind of in-person counseling. We've got First Home Alliance, we've got Prince William County, we've got, Arlington, all of them have a housing counseling agency. And if you go on to HUD.gov, you can find some reputable housing counseling agencies that way. But I would totally recommend, instead of doing that, going to the lender that you plan to use and working with them, because they're going to know, like, if there's a specific housing counselor
Mhm.
that will help you with the program that you're interested in.
100%. Well, thank you so much for your time and breaking it all down for us, and helping people to understand and to help them to achieve their goals. And yeah, thanks again, Laura.
Absolutely. Thanks for having me. I love talking about this stuff. So give me a call anytime.